Pre-function area, we are ready for you. It's time for us to head to the afternoon segment of today's conference, starting in just a short while with the presentation from Morgan Stanley. Great, so as we're about to get underway, I kindly ask that you make your way to your seats. For those of you who may be deep in conversation, plotting to change the world, one stock at a time. We begin our afternoon session with a presentation from Morgan Stanley on global perspective opportunities within emerging markets, presented by Steve Edwards, Senior Investment Strategist and Head of the Portfolio Analytics and Cross-Asset Strategy Team. Mr. Steve Edwards, a CFA, serves as a Senior Investment Strategist and Head of the Portfolio Analytics and Cross-Asset Strategy Team within Morgan Stanley Wealth Management's Global Investment Office in New York. Along with his team, Steve is responsible for quantitative analysis to support the firm's asset allocation, manager selection, and portfolio construction decisions. His team oversees a series of ETF model portfolios and several firm discretionary portfolios and provides investment strategy through special reports and periodicals, including the monthly Topics in Portfolio Construction piece. Steve Edwards started his career at Bridgewater Associates and later served as a researcher and portfolio manager at Spruce Private Investors, where he designed a systematic investment process and managed client portfolios and a global macro overlay. To share more on the global perspective, opportunities within emerging markets, ladies and gentlemen, will you please welcome from Morgan Stanley, Steve Edwards.
Thank you. Good afternoon. I acknowledge Mr. Brian Manning, Minister in the Ministry of Finance. All other protocols observed. I am honored to join you for this 40th anniversary celebration, and I want to wish the heartiest of congratulations to the TTSE and all its partners. I wish you many more years of tremendous success and growth. Today we'll be talking this afternoon about the global perspective in emerging markets. So what I'd like to do here is highlight, you can see there on the left-hand side, a number of the themes that I think are relevant today. And I want to talk to you not only about what's going on in the very immediate term, but also the longer-term picture. So you can see the 5 themes there. The first is long-term maturation, which is a very bullish story. And I want to explain to you how we can think about the growth in emerging markets from an investor's perspective. The second theme I'd like to highlight is that we currently have a challenging macro backdrop. Everyone can see that, and we'll try to contextualize that. But we're in an interesting point of transition. We can see a potential sunsetting of the US dollar as being very, very strong as we get to the end of this Fed tightening cycle. And also we've seen some themes that have led to folks moving really into the US versus emerging markets over the last 10 years or so, and some of those themes may be sunsetting. So therefore, I'd like to talk about some of the intermediate opportunities in emerging markets. And then finally, I'd like to focus on a stock level, what tends to work in emerging markets? What are the types of companies that investors are seeking? So hopefully it'll be a helpful presentation. So here, what I'm showing you is a comparison of the GDP share of different countries and regions versus their equity market capitalization. And the most important line you can see there is on the far left. We can see that the emerging markets make up about 10% of global equity market capitalization as measured by the MSCI All Country World Index. But they make up more than 40% of GDP output. So that is a tremendous gap that we can expect to narrow over time. you'll see that the US has almost, not exactly the flipped relationship, but making up approximately 20 or 25% of global GDP, but making up more than 40% of global market capitalization. And ultimately, those trends are going to be long in multiple decade terms, but very important as we go forward. The next charts here I'd like to show you. On the left-hand side, what you're looking at is the growth in emerging market equity investments from fund holders. And on the right, you can see that compared to the developed markets. The important story here is that investors are very hungry for emerging market investments, and they've shown a willingness to continue adding capital over time. Whereas in the developed markets, they tend to be a bit more fickle, looking for good entry points and exit points. And so ultimately, that's a good bullish story. So we have the growing equity market capitalization story, plus an investor interest in emerging markets. So that's the long-term story. Let's focus on the challenging macro backdrop that we see here today. What you can see here in this slide is the performance on a year-to-date and one-year basis for a number of emerging market indexes, as well as the US. And clearly, it's been a very, very difficult year as we've seen tightening in financial conditions, a change in Fed policy, a change in global central bank policy, inflation, war in the Ukraine, many, many different challenging things. And clearly, the most important thing that we're not observing is that valuations have come down for equities around the globe. So why is that? Well, ultimately, we think that's mainly a rate story, that rates have risen and therefore equity market valuations have adjusted accordingly. The next story, of course, is inflation, and we can see this strong acceleration in inflation where the US is basically maybe peaking in terms of its inflation, but it's still nasty. But really in Europe is where we're seeing the strongest inflation. And this is being driven, of course, by the energy markets where you have supply constraints that are obvious from Russia. So ultimately, this chart here will require further central bank action. We can see the Fed is geared up to continue hiking its rates, but the ECB and the BOE, in Europe and the Bank of England will also be increasing rates. So that generally impacts all global markets. And so we think that ultimately inflation needs to come under control. For the Fed at least, they will raise rates until CPI, the Consumer Price Index, is below the level of Fed funds. That's going to happen, we hope, in the first half of next year, but that's what we're looking at in terms of the world. So let's take a quick look here about, this is Fed policy here on the left-hand side, and then volatility versus the Fed funds rate on the right-hand side. And what we can say is that we've had volatility, but unfortunately, we're unlikely to get a central bank response to that volatility. Generally speaking, what we've seen over the last 20 years is that when there's been volatility in the equity markets, you've seen a central bank response to ease policy and therefore ease financial conditions and therefore provide some sort of support to equity markets. We've called that the Fed put sometimes. Well, unfortunately, the Fed put is probably deeper out of the money or below current levels, and so that has made this a challenging environment. So as we look to the very immediate term, we need to be cautious about that. This next page here gives you a number of charts that shows you the growth aspect of where we are from a growth perspective. And what I'd like to call out to you is that a number of these gauges are pointing in a downward direction. Now, the thing about markets is they tend to bottom before economies do, right? But we need to acknowledge the fact that we're in a world where there is some slowdown. There is one positive sign here that we can say that China is stimulating through credit. That is going to be less of an impulse, though, in this cycle versus other cycles. So I don't see, as the global central banks outside China are tightening, that China, as it's easing, can offset all of that. But that is one sign that we need to pay attention to because that economy, coming out of its COVID lockdowns, is likely to stimulate. So it could see accelerating growth as a key member of the emerging markets. So I'm going to turn now and just talk a little bit about a turning point. So if you look in the last 10 years, we've had a very US-dominated world. The US dollar has been incredibly strong. The US stock market has been incredibly strong. And at least relative to other developed markets, US growth has been relatively strong. All of those things have been as a result of very accommodative monetary policy from the Fed, as well as having the tech sector be a dominant global sector. So the US has had so much of a benefit from that. But I think it's important to think about what's coming next, because trees don't grow to the sky, as they say. And so we need to think about what comes next. Well, those trends may be long in the tooth, and so we may have some opportunities to consider fading those trends. And so we've been highlighting the importance of thinking about, yeah, we've seen a trend that's true for the last 10 years, but don't bet on it being the same forever. And so what would be some of the catalysts that we'd look for? Well, in strength of emerging markets, it's really potentially a turn in the US dollar, which has been incredibly strong. It's a safe haven currency for sure, and Fed policy rates are now higher than the rest of the developed markets, but it looks toppy, right? You could have a situation where the dollar tops in the next 3 to 6 months, in which case it would give a positive support to emerging markets. What you're looking at here is the relative performance of the S&P versus emerging markets, and you can see that they're very highly correlated to the move in the dollar. That is, as the dollar strengthens, the S&P has outperformed the emerging markets index. Well, if you saw a turn in the dollar, that would lead you to a stronger emerging market performance on a relative basis. So let's now look at the next chart here. What I would like to show is the balance, though, that we see in the emerging markets. The emerging markets have diverged a bit from international developed markets, which are very currency sensitive, and they've become slightly less currency sensitive over the last few years. That's what's shown in the left-hand chart. So that's a good thing. And that's reflective of the fact that emerging markets in general have a much better funding situation than the developed markets. Developed markets are in trouble from a perspective that they have a significant amount of debt to GDP. Many emerging market countries are far better in far better shape. And so we're actually seeing there's not a large-scale currency issue, even with this tight liquidity that we're seeing. That is a good thing, and that shows the maturation of the emerging markets. The other thing I would point out is the diversity of the sectors in the emerging markets. On an index level, you can see that there's actually better balance of the emerging markets from a sector perspective than even in the US, which has a very strong amount in a couple of sectors, those being technology, as well as in consumer discretionary, and then in healthcare. So the US is, as you can see, kind of unbalanced, whereas the emerging markets is much more balanced. So now what I'd like to talk about is the potential opportunity that we see in the intermediate term. This is a chart here where we're showing the major sell-offs in the emerging market index over the last 20 years or so. And what we're seeing is that, generally speaking, emerging markets have bottomed around this point. Valuations have significantly improved and are quite attractive relative to developed markets. And so our strategists are calling for a near-term outperformance of emerging markets versus developed markets. And that's predicated on the lower valuations and the idea that emerging markets have tended to bottom before other global markets. So that is a good story, but what is catalyzing that? So let's look into that. So what's catalyzing this is a tremendously different cycle than we've experienced. This cycle has been so fast, right? If you think back 30 months ago, we were in lockdown, right? And this cycle has proceeded so quickly, much more quickly than the post-global financial crisis cycle, which was about 10 years long. So we have so many dynamics that are changing now, and a number of the other speakers discussed this, but ultimately when you have a fast cycle, that means that you have fast things happening quickly. Looking ahead, the next cycle may be longer, the next cycle may be a bit more, have a bit more in terms of legs. But right now we're at a point of transition where we think that ultimately we might be transitioning from a very strong expansionary phase to this phase where we're kind of going to be moving into a bottoming. Like if you have an economic bottoming, that's generally a good time to be getting into equity markets. And as I mentioned, emerging markets have tended to bottom before global other markets. So let's look at why emerging markets look attractive. This is a squiggly line chart. I'm sorry if it looks like spaghetti, but the point of this chart is to show you that the equity risk premium, that is how much you're getting in terms of premium for investing in equities versus fixed income, is the most attractive in the emerging markets and least attractive in the US. So US valuations still, relative to the US 10-year yield, are relatively high. So we'd be concerned that you're not getting much premium in the US. However, that's not the case in the emerging markets, and that's something that ultimately investors should be hungry for as we turn into a new cycle. The same idea can be shown here. The idea behind this is basically to take a picture of the emerging markets and their currencies as well as their equities. And in the good zone here is the lower left-hand corner. The good zone here includes some major emerging markets. And you'll notice the US is in the bad zone, which is the upper right-hand corner, as being the most overvalued both on a currency as well as equity sense. So ultimately, this is a framework that investors will be using to think about, you want to see a country that has a currency that's fairly valued and an equity market that's fairly valued, and that will be driving the investor case. Continuing on here, another bullish sign for emerging markets is that currency volatility is actually lower in emerging markets on an index level than in the G7 countries. And this has only happened a few times here recently. In fact, you'll notice from 2018 to 22, there really wasn't any time where that was the case. But whenever that has occurred, that's generally been a bullish thing for emerging markets because it shows that developed markets are more volatile and therefore the emerging markets could be more attractive. The next thing I'd like to talk about is just a credit perspective. So right here, what I'm showing you is the credit spread for the JP Morgan EMBI Global Index. And you can see how much tighter that has been and lower and stayed low even amid the challenges of this year. Now, yields have risen, but the spreads on emerging market debt have not. And that's a good thing because it shows a relative strength and health. Right? So ultimately here, what you're seeing is that there hasn't been a real strong spread widening amid some of the challenges of this year, which again is quite a good thing if you're bullish on emerging markets. I would like to sound just one cautionary note, and it would be unfair to not leave this, to leave this out, which is to say that geopolitical uncertainty is not likely to decline anytime soon, unfortunately. It would be awesome if we could wave a magic wand and make that so, but in light of high geopolitical uncertainty, that likely means that equity valuations would likely be lower for some period of time. But I think on a relative basis, you still have some pretty attractive situation in the emerging markets, and I think that that will be seen by investors as we go into a consolidation phase. So for the last couple of minutes in my remarks, I'd just like to talk about what works from an investing perspective. And we've done a lot of work on my team at looking at underlying stock dynamics. What types of stocks are generally rewarded and why? And so one of the comments that I would make here is you can see on the left-hand side, these are three factors. Factors are groups of stocks that have similar characteristics. Growth and value are common factors that people talk about. But here we're talking about three or four other factors, and we're highlighting that quality, value, and efficiency have been factors that have done well not only this year, but in many years in the past. Whereas this year, we've seen the factors of profitability. Those would be companies that kind of have high growth and profitability. Momentum and growth itself have struggled. We see this because a lot of those companies had deep and high valuations coming into this year. But we can see that quality, value, and efficiency have really shined. So to break down what those kinds of companies are, well, they're companies with low debt on their balance sheets, high degrees of stability and profitability, and decent valuations. And so that's a really key point to think about is, as you're developing your company strategy, as you're thinking about the investment strategy, you want to seek those really strong companies that show that quality edge. And what we can show you here, this is showing you some of the significant reversals that we saw from the last few years to this year, which is you can see how, on the left-hand side, growth and momentum were fantastic for the 3 years prior, but this year they've turned southward. And why is that? Well, again, I think a lot of it has to do with what investors are willing to pay from a valuation standpoint. The last thing, next couple of slides, what I'd like to talk about is this concept of quality. And I just ultimately believe that this is what investors are really seeking. And we've actually combined some factors here. If you combine quality and value, and then GARP is combining growth and value, that's really what investors and portfolio managers would be looking for. And so those factors have historically outperformed in a very consistent way. And ultimately, you'll see if you go read presentations of investment portfolios, right, they're going to say, we use a GARP approach, growth at a reasonable price, or we look for quality value companies. And so if you can be a stock in that type of setup, you're going to be well liked by investors and therefore rewarded from a share price perspective. The last comment I'd like to make is just, we talked about quality as being a factor that's important. Well, it's actually been growing as a percentage of the emerging market index in a good way. And so you can see here in the light blue line, very strong growth in the quality factor. What percentage of the companies show a stronger quality bias? And this is something that, as the market matures, if you can combine quality plus strong economic growth plus good governance, that's ultimately going to look to be a very attractive investment for investors, and that will likely lead to further maturation in the capital markets and the emerging markets. So I want to thank you for your time today and appreciate the opportunity to join with you. Congratulations again to the Exchange for 40 years, for many, many more, and thank you so much.
And a special thanks to you, Steve Edwards, of course, of Morgan Stanley, for sharing the perspective from your organization standpoint, as well as the experience and research gathered over time. As we continue with our presentation and conference this afternoon, it's time now for our second panel, and we will focus on the theme of transforming the regional capital markets to serve the next generation of investors. By chance, I'm just asking for tech at the back. Are they mic'd or not? Okay, so may I ask the presenters for our second panel, you may take the time now to simply make your way to the technical booth at the back of the ballroom here so that they may mic you accordingly. And our moderator as well is requested to do likewise. Thank you so much. Take your time. I have a lot to say before you actually start. When we think of the next generation of investors, who are they? Where are they? And what's their appetite for investment? Investment in what? And for how long? Are they going to be interested in Trinidad and Tobago and Guyana and Barbados and Jamaica's stocks? Or do they have an appetite for TikTok, Netflix, Amazon, and the list goes on? Technically, based on what they're exposed to, that we tend to tell them, turn that off, they perhaps could be more savvy investors than any of us in this room, knowing what's happening with Kim Kardashian's stock, Meghan Markle's stock, or even Liz Truss's stock. They are abreast of everything happening on the planet. And so our next conversation has us chatting with those who have represented the stock exchanges across the Caribbean. I present Dr. Marlene Street Forrest as one of our panelists. She's the managing director of the Jamaica Stock Exchange and director of both its subsidiaries. Dr. Street Forrest's mandate is to continue the process of developing the JSE Group, and particularly the exchange, in an atmosphere of transparency and fairness, while utilizing appropriate technology in providing the greatest possible efficiencies to the market. She has a wealth of experience, having worked in senior management positions at varying private and public sector organizations in Jamaica and abroad. It's under her stewardship that the JSE became demutualized and the US-denominated market and the junior market were launched. Dr. Street Forrest also spearheaded the registrar division of the Jamaica Central Depository, the JCSD, when she served as general manager for this subsidiary of the JSE. In 2016, she was conferred with the honor of the Order of Distinction in the rank of Commander in recognition of her outstanding leadership in the growth of the Jamaica Stock Exchange, and in that same year also received the Afro Global Excellence Award for Global Impact from Canada for exhibiting great leadership, vision, integrity, and commitment to excellence. Dr. Street Forrest was conferred with an honorary doctoral degree in public policy by the University of the Commonwealth Caribbean on July 18th, 2021, for her contribution to nation building. From Barbados, Marlon Yard. No one applauded. You see, that's the challenge. Because the Jamaicans aggressively applauded theirs, we're now obligated to applaud all the others. Thank you, Jamaica, for leading the way yet again. Marlon Yard has been with the Barbados Stock Exchange Group since November of 2003. The group includes the parent Barbados Stock Exchange, its subsidiary, the Barbados Central Securities Depository, and the subsidiary of the BCSDI Custodian Trust Services. He currently holds the position of Managing Director and CEO within the group. He has played a leadership role in significant developments within the BSC over his 18-plus years tenure, including the BSC's demutualization and the launch of the international securities market. He's a chartered accountant with professional qualifications, being a fellow of the Chartered Professional Accountants Association of Canada and a fellow of the Institute of Chartered Accountants of Barbados. From the Eastern Caribbean, Trevor Blake. Trevor Blake is the Managing Director of the Eastern Caribbean Securities Exchange and its subsidiary, the Eastern Caribbean Central Securities Depository, and has been the CEO of the group since January of 2005. He's been integrally involved with the group from inception and served previously as a member of the first boards of directors of the ECSC and its subsidiaries as company secretary. And prior to joining the ECSC group, he held the position of Director of the Financial and Enterprise Development Department of the Eastern Caribbean Central Bank, with direct responsibility for the bank's Money and Capital Markets Development Program. From Guyana, George Edwards. Mr. George Edwards is the General Manager of the Guyana Association of Securities Companies and Intermediaries Incorporated, Guyana's local stock exchange. Prior to joining the stock exchange in 2005, he spent most of his working life in banking, working previously with Barclays Bank and the Guyana Bank for Trade and Industry Limited. He holds a Bachelor of Social Science and Business Management from the University of Guyana and an MBA from the University of Guyana Commonwealth of Learning. From Trinidad and Tobago, Eva Mitchell. We met her this morning. Eva is the Chief Executive Officer of the Trinidad and Tobago Stock Exchange Limited and its wholly owned subsidiary, the Trinidad and Tobago Central Depository Limited, and has joined the Trinidad and Tobago Stock Exchange in 2016. She has over 19 years' experience in various areas of financial services, such as finance and asset management, retail and commercial banking, and brokerage services. She holds responsibility for business development and operations of the stock exchange and its wholly owned subsidiary, the TTCD. Oh, this gets better, because moderating the panel is Dr. Marlene Atz, a lecturer based at the University of the West Indies, St. Augustine, with more than 25 years' experience as an economist, focusing primarily on the economics of sustainable development. Dr. Atz has consulted with regional and international organizations, including the Caribbean Development Bank, the Inter-American Development Bank, and the United Nations Development Program. Dr. Atz has served as chairman, deputy chairman, and a member of a number of state boards and institutions, and currently serves as the director on the boards of Tatil General and Tatil Life. She's also a board member of the Family Planning Association of Trinidad and Tobago and is a regular public commentator on national, social, and economic matters, discussing transforming the regional capital markets to serve the next generation of investors. I happen to have one of those next gens. studying in the UK right now. So I'm keenly interested in the panel. And so without any further ado, it's over to you, Dr. Act. Welcome.
Thank you, thank you. Good afternoon, everyone. It sounds loud to me. All right, okay, there we go. Thank you so much to Wendell for doing such a splendid job, as he always does, moderating and providing his services to forums such as these. As I sat waiting in the wings, I thought how fortuitous it was in terms of the flow and the fact that we were actually running a little late. I was rushing coming down from the east, but I had the opportunity to listen to the presentation from the Morgan Stanley colleague, and I thought it was such a wonderful segue into our session. And of course, when Wendell was doing his introduction, I said, why didn't we invite him to do the moderation? Because he seemed to be, so okura with the issues. So I want to thank both the Morgan Stanley in terms of what was said before. We're coming out of the pandemic, we're coming out of COVID-19, not quite out of the woods just yet, but as an opening salvo, I wanted to ask my colleagues on this panel to kind of share with us your elevator pitch, your 30-second kind of line. What do you think from your perspectives, because we have a fairly diverse and representative group of professionals from around the Caribbean. What do you think are some of the opportunities and challenges coming out of COVID-19 in terms of your exchange from your particular perspective and for the region moving forward? Because I think as much as we saw COVID-19 as a threat and having a negative impact, there also are some opportunities that we can distill. So I want to invite our colleague from Guyana to start the ball rolling. We didn't do too well in terms of the West Indies team, but we'll overlook that. We're going to have our own sort of batting this afternoon.
Before I answer, please permit me to congratulate the TTSC for 40 years of service to their community and the region. And so one of the things that has happened from COVID is that it has forced us to embrace technology. Mm-hmm. And we no longer have to depend on physical presence for making decisions. And we have turned to technology, and as we heard earlier, all these fintech companies are coming out to take advantage of that movement away from the physical towards technology. So that is definitely a plus. Different types of products will come out, new companies will come out to take advantage of these technologies. And the stock markets, the stock exchanges in the Caribbean will be no different. We'll have to embrace the technology to get on the same page and move towards that so far elusive connected exchange that the discussion was started since 1989.
Okay, thank you. Our colleague from the OECS in Kitts, one of my favorite islands. How has COVID-19 impacted, and what opportunities you see that have emerged, or challenges that you see that have emerged coming out of the pandemic?
Right, thank you for the question, and good afternoon all, and congratulations, Eva, on the 40th anniversary. We look forward to getting to 40 years at some stage. Yeah, but in terms of COVID and the impact it has had, well, in terms of the question you asked, one of the things that we have seen is in the aftermath of the pandemic and with the current unrest or the war in Ukraine, we've seen interest rates increasing, and I take a certain perverse joy in that. One of the things we've been trying to get started in the Eastern Caribbean, well, not started, but to develop, is a corporate debt market. Mm-hmm. And when we speak to our listed companies, other corporates, they said to us, well, the banks are meeting all our needs. Why do we need to come to the market? So I mean, I think that could help to provide some high interest rates, could help to provide an impetus to get the corporate debt market working. The other thing is that we have a number of listed companies seasoned companies. They're well established. Again, their bankers provide all their needs readily. So why come to market to raise capital? With interest rates again increasing, we're hoping we could have some renewed interest incoming for APOs and things like that. Of course, in terms of operationally, as George mentioned, we have benefited from the how should I put it? The learning that we don't have always to get together in the same space to get anything done. We work remotely. We have continued to operate remotely at the ECSE, and we think we will, even when we get back into office, we'll have some hybrid situation where persons could work remotely a few days a week, a few weeks a month, or what have you. And it allows us to access expertise from currently 2 members of my management here in Trinidad, and we work pretty well like that. So we don't have to have everybody in one space to get things done. I think that is one of the most important legacies that COVID will leave us.
So the technology has brought an integration that has been otherwise elusive for CARICOM for all of these years. So that's one of the things that has come out of COVID-19, for which we're very grateful. In terms of Barbados' perspective, what is it that you think moving forward, if you reflect on the last 2 years, and of course, the mention was made of the interest rate. So we know that there's COVID-19, there's Russia-Ukraine, there are all of these geopolitical issues that have been affecting us in one way or the other. What is Barbados' take in terms of what are some of the opportunities or challenges that you've encountered?
Well, again, let me thank the TTSC, thank Eva and her team for having me here to be part of this event and being able to be part of the index launch. Really appreciate it. I think one of the things I have learned or come out of COVID-19 for the last 2 years is that it's forced us as business people, because even though we're exchanges, at the end of the day, we still have to meet the requirements and what our shareholders are asking for, and even all the stakeholders, staff, everybody else, is that we need to adapt to what's going on in the marketplace, and we need to evolve. And in adapting and evolving, we find that we have to be more efficient in how we do things. And efficiency these days require that we use technology. And part of that adapting and evolving involves us creating greater access to the market by all participants. Our thought for the day is, how do we deal with the next generation, the millennials, the Generation X, the Alphas, the Generation Zs, and the alphabet soup goes on. And they want access, and technology is their way to access. They want to be able to take up their mobile devices and use their mobile devices to access the market. So we have to find ways to tap into that market. And also with dealing with the younger generations, this whole question of work-life balance is essential. Folks like me and Marlene, in fact, all of us, except you, Eva. We grew up in an age where you have to you need to get something done, you just do it. Sacrifice and you get it done.
And you had to go to the office.
And you had to get to the office. So we have to find ways to deal with the younger generation.
The changing dynamic.
The changing dynamic. So that is important. So I'll start there, and as the discussion goes on.
I'll come back to the question on technology in a bit, because it seems to be the common thread in terms of what we're pulling out of the last 2 years. My namesake.
Okay. I want to just thank Eva for inviting me to TTSC's celebration. Congratulations. The COVID, the pandemic, really validated for us what we were doing. We had started doing at the Jamaica Stock Exchange. First, we started with our business continuity plan and actually lived it. And so when the pandemic started, we were able to pivot right away. And it also gave us some statistics as to how investors behaved, because we had the online trading platform, and we were able to see how investors moved seamlessly through to the trading platform, and the type of investors, whether it was the younger ones or the older ones, and the percentage. So it gives us data, and that is important for us. It also allowed us, because initially, as Stephen spoke about, the access to investors in garnering capital. Yeah. We were not affected by that because we had, for example, the Go IPO. So technology is very critical in respect to, again, just the underpinning and the training of investors to continue to invest in the market. We were able, through our e-campus, to just go totally curated content so that the learning, we were not really disrupted. Now, what that says to us is that despite the fact that technology is expensive, and that's a problem that I think all small exchanges have. Yeah. When you're talking about technology and the fact that you must use it, you see the costs going up. And so the fact is, how do you balance that against giving what you're supposed to give in terms of service?
But from what you're describing, it seems as if the cost benefit comes out in favor of investing in the technology.
It does, it does. But at the same time, you have to look at other ways down the road. If you are not a vibrant exchange or your volume and values are not up, how to pay for technology. But what we also saw is the fact that, yes, we had, say, an app that was not interrupted, but you need to go the next level for the Gen Zs, the millennials, that are calling for that, because the data suggests that. Yeah. So you know that this is the way in which you must move in order to keep up internally, regionally, and actually globally, because capital is going to go where it can find a home and find it quickly in terms of access.
Thank you for that, and it segues nicely into the question that I want to pose to Eva. Slightly different twist. We recognize the importance of technology. We recognize that the millennials, the Gen Zs, persons like myself in that category. What's the laughter about? Anyway, the Gen Zs, the millennials, persons like myself in that category, we recognize, and the data supports it, certainly in the Jamaican, I suspect the data would be the same for the other exchanges, that this is the way to go, this is the direction. If you want to get the interest of and to maintain the interest of, you have to make that pivot to the technology. How much of a challenge will it be to keep up the technology in pace? Because you're talking about the Gen Zs and the millennials who, you know, came out of the womb almost using technology. How much of a challenge might it be to maintain that momentum in terms of keeping up the technological shifts to maintain their interest? How much of a challenge do you think that might be? If we accept that technology is one of the big learnings coming out of the last couple of years.
Yeah, I think it's definitely something that is required in order for you to stay relevant. So if you want to be a sophisticated exchange offering a sophisticated range of products, you want to have that level of interest on the exchange, then you must stay relevant, and you must do that through technology. This is what the market wants. And just like Marlene and my other colleagues, at the Trinidad and Tobago Stock Exchange, we actually were mobilizing, or we had a digital agenda prior to COVID-19. Actually, COVID-19 just really accelerated that agenda for us. And just like the online trading platform, we were expected to launch that prior to the COVID-19 with some delays, We launched it in the middle of COVID-19, and that accelerated transactions, it accelerated activity. We actually estimated that the trading or the activity on our online trading platform would account for 5%. In one particular month, it accounted for more than 27% of the trading activity on that during that particular period.
And do you also collect data, as Marlene does, in terms of the demographics? So you have a sense of the ages that...
Yeah, definitely. I mean, it's definitely the younger generation, young professionals also. And the thing is that we've had interest from them saying, okay, what's next?
Okay.
Where do we go? What's next? But of course, we have other challenges that we must step in as an exchange. We must step in as a wider market to try to address collaboratively, and as a wider region to address collaborative, to bring that sort of interest onto the exchange, onto the region, and show that we are embracing technology, we are listening to the call for technology, and we are responding to the demands for technology.
Okay, excellent. So how do you navigate this space? Is there an opportunity? And I think someone mentioned an opportunity for hybrid. So you have the technology, but you also have the traditional approaches. So Wendell, for example, mentioned that he had one of those Gen Zs who would be an investor online. But if Wendell wanted to relate to that, and I did hear him say, or he suggested that he's not as technologically savvy, is there an opportunity for that kind of hybrid approach to treating with investments? Or is it that the pendulum is swinging more to the technology side?
You have to have space for both.
Okay.
Yeah.
You have the baby boomers, like myself.
I'm a Z. I'm a Z, yeah.
Who will not adapt as readily, and they do have the money. So you are going to have to still get them where you want them in terms of investing in the market. You have those who are will adapt quickly. So you have to have the space for those. Sometime in the future, it might be just one thing, but right now, it has to be a hybrid approach.
A hybrid approach,
yes.
If you may jump in. Oh, sorry, go ahead.
Certainly.
Go
Our
ahead.
colleague from Barbados, yes.
No, like Marlene, I'm a baby boomer with a millennial.
The other
mindset.
Marlene. Two Marlenes, the other Marlene.
Marlene M. Marlene's three here. I'm a baby boomer with a millennial mindset.
Yeah.
And that's because I have a daughter who makes sure I understand what is going on. So I believe there needs to be that bridging.
Hybrid, as it were,
Yeah,
where you
that
cater.
hybrid group.
Okay.
So there are people who are interested in the space at all levels of any age range.
Eva, you wanted to weigh in on...
Yeah, I just wanted to agree with my colleagues. We do see that there is a new level of sophistication that is in the market now. And what we do see is that everyone, especially the younger investors, are looking for quick opportunities. So they want to be able to get into a position, get out of a position easily. And they want it to be as less expensive as possible. And while technology can be expensive and an expensive investment, over time it must evolve into something that is attractive for the market and the wider investment.
Certainly.
Investment landscape. Yeah.
As we're talking about young investors, persons like myself, I will keep saying that until you all stop laughing. As we're talking about the young investors and the fact that they think differently and they behave differently, I want to ask George initially about the question about ESG in the markets and how is your exchange dealing with the issue of ESG? Guyana in particular, I was reading Barron's the other night and they were talking about Guyana, about the new potential oil power in the region, and juxtaposing that to Guyana's traditional standing as being carbon neutral with the Iwakurama and the forested areas, et cetera, et cetera. How are you incorporating ESG into the work of your exchange in Guyana, given where Guyana is now in terms of its position to take off into non-renewables and become one of the players in the oil market?
Well, currently there are bodies in Guyana that look at particularly environmental aspects of various businesses. While we have not actually incorporated it yet into the investing sector, it is there. Corporate governance, some years ago, the Private Sector Commission got together and came up with a code of corporate governance. Unfortunately, that code is not law. It is voluntary. And sometimes you may find that the very people who help to draft those codes are the primary people that will go against it. Sometimes that happens.
We're not throwing stones, okay?
But yes, as the presenter in the next room was talking about ESG and what's happening, and that as more and more bodies start to put pressure on companies to strengthen their ESG capabilities, then the stock exchanges, stock markets will have no choice but to get on the bandwagon and incorporate it into their laws and their regulations.
Particularly as I was suggesting, our Gen Zs, millennials are very in tune with environmental issues. So I think it would be something that they themselves would be looking for in terms of how the markets treat with issues such as ESG. I see my friend from the OECS, I see him nodding. Is this something that you're looking at the Eastern Caribbean?
Well, yes and no. Governance issues definitely.
But the environmental and social.
Environmental and social, that has not featured in the investment business.
Not just yet.
In our market, not just yet. But of course, I mean, we understand the issues, and being, as vulnerable, small states, we have to take cognizance of it. And we, in fact, we have agreed to partner with the central bank on looking at greening the financial system. So it's something that is coming in, but really neither issuers or investors are really talking about it.
I think it's a timely conversation for us, particularly, as you said, small island developing states, the impacts that we've had over the years. I know Jamaica has had a long history of grappling with the impacts as to the OECS countries, but coming into COP27, I suspect it is going to be an issue that is going to again be on the agenda. How does the business sector, the private sector, treat with issues of ESG and particularly climate change? I don't know if my namesake, Trevor, sorry.
Just move on. Why I'm shaking my head is because I have two kids, one 26, one 19. I started late. and they both are more in tune to these issues than I am. And I marvel all the time when I talk to them and they raise, or in conversations, these things come up, and their stance on it is so much more advanced than even my stance. So the young people are.
So you have the evidence that the young people really are very keen to ensure that these issues are factored into business and investment decisions. Marlene?
Well, you spoke about COP27, and at COP26, the emphasis was on how stock exchanges might be able to influence the behaviors of listed companies in regard to ESG. And so this is a consideration we are having at the stock exchange. Starting with governance, there is a compulsory reporting on corporate governance. We have a governance index, and this will be expanded to ESG, not only the corporate, but ESG. We have the best practices award that has infused in the award issues relating to ESG. And when we speak about exchanges and regulation in respect to ESG, again, the exchange itself too must look at its own self to see what it is doing. So for example, for the stock exchange, we have embarked on greening the exchange.
Reducing your footprint.
So we reduce the footprint, and so by the end of this year, we would be almost totally off the grid because we have infused solar energy. So, you have to practice what you preach first in order to do that. And while we have not yet changed our listing agreements, etc., that's something we intend to do but at the first instance, it is more by just appeal in terms of that. And as a member of the Sustainable Stock Exchange, it is one area that they are focusing on heavily.
Yeah.
And if one would go to that website, you will see actually a framework for ESG, and this is something that we are pursuing. In addition to that, you would know that we have partnered with our government in respect to the green bond. So through the Green Climate Fund, we are developing the framework, the entire ecosystem in Jamaica to allow for the listing of green bond by first quarter of 2022.
Excellent.
2023.
Okay.
Yeah. If I may add.
Yes, Marlon, sorry.
Yeah, again, I mean, we're going through our business planning and budgeting process for 2023, and one of the initiatives that we are looking at is this whole question of putting photovoltaic panels on.
I was going to raise with you, given Barbados's long history with
Yeah.
solar technologies, whether or not this was
Yeah,
something.
I remember a few years back when it first, this technology first came up, we were contemplating it. You know, and you know, we went up on the roof and we looked at the space to see what we can do. But then it was so expensive. But
At
the
the
technology the cost is coming down now. So that is something that we are actively looking at to get involved. The technicians are coming in. Various technicians are coming in, giving us quotes to give us the best price. Again, like Marlene, we are part of the UN Sustainable Stock Exchange Initiative. I remember when Marlene raised it with me a few years ago. You know, I went to my board, and at the time they didn't see the value in it.
The significance, yeah.
The significance, but went back to them last year, and they said yes. Well, different board, different people on the board, so I guess a different perspective.
Different leanings and different understanding of the
Different
issues.
understanding. So we are part of that process. We are part of that process now too as well. And then we've drafted rules for green financing, because again, in Barbados, there's this big push for photovoltaic farms. You've seen them popping up all over the country. And people have come to us about listing green financing projects. And, you know, we've looked into it, what is required, the certification process, we've drafted the rules. So it's just a matter now of getting the rules approved and getting our actual first listing and not all the talk, so to speak. But it takes, like everything else, it takes time. So we're very much part of the process, and we want to play our part too as well. And as Trevor said, the young people are asking for.
That's what they're asking for, yeah.
They are thinking about what we are going to leave for them, and we have to start behaving in a way that makes life sustainable for them down the road.
It's interesting that the conversation really is a sustainable development conversation with intra and intergenerational equity. Eva, the Trinidad and Tobago context, a lot of conversations have been happening, certainly in the last budget presentation, around renewable energy and the transition and essentially reducing the carbon footprint. What is happening in terms of our local exchange on this score, in terms of reducing the footprint and looking to green bonds, et cetera?
Yep. So coming out of the budget and prior to that, COP27, we gave ourselves some ambitious targets with respect to the reduction. Actually, right now, we have a lot of our public infrastructure that is already green. So it is something that is in train. From a listed company perspective, and I want to just agree and go back to the presentation done by PwC, investors are calling for ESG. International investors are calling for ESG. And that has forced a lot of our locally listed public companies to actually change their ESG agenda and incorporate it in their strategic plan. So they actually report on it without having any hard requirement to do so in a local context. So our companies are already up to that standard and, you know, evolving into what the regulation would eventually evolve into. So I'm happy to say that it is part of our reporting already, even though it's done informally. So, I mean, right now at the stock exchange, we are having preliminary discussions with some multilateral partners with respect to launching green products. I don't want to speak too much on it right now because it's very preliminary, but it's something that we know is part of the agenda. It's something that the market is driving. It's something that's being driven from a policy perspective, so the change has to happen.
And it's going to dovetail nicely into the national agenda
Correct.
to essentially look at the transition. I know we started a bit late, so we want to wind up the session with just one round of questions again as we close off. Number of regulatory changes, increased competition in the market. Your final thoughts. How are these regulatory changes and the competition generally, how are they causing you to shape your business, so separate and apart from the
to allow the market to grow, allow the market to be able to trade and perform settlements far faster than we currently can do.
So final word, do you think that the collaboration, and George was saying that some of the other exchanges have paved the way, do you think that this is an opportunity, a litmus test for another effort at integration in the region that can allow us to kind of pivot forward, to use the terminology of a famous prime minister of the region? Do you think that the exchanges can do this now, can provide that for us, and allow our younger investors to truly experience sustainable development at the regional level?
That was to George.
No, that's to anyone. Marlene, my namesake.
Well, this is going to take the will. We talk a lot. But it is where the rubber hits the road.
Absolutely.
We have just, in collaboration, have the launch of this Caribbean Index, and I think that there's so much more that can be done with all the stock exchange. It's going to reduce costs. It's going to
transactions costs. Absolutely.
Exactly. Yes. Increase our ability to compete.
Marlon.
Globally.
No, I want George to remember, back on the 15th of March, 2019, I flew to Guyana and we signed an MOU between the Guyana Stock Exchange and the Barbados Stock Exchange so that we can work together. So we're committed.
You're taking the integration process. You're
other.
moving forward.
And then Marlene knows.
The other Marlene.
My Marlene here. She knows, I can't remember, when was it that yourself, myself, and Wayne Eiton sat in my office, the meeting room between our office, and signed the CXN agreement.
Oh, yes.
CXN agreement. The
2004
same,
or
when it was?
4.
I think so. It was so far back.
Yes, it's long.
All right, okay. we're having a moment there. Trevor.
Yeah, I want to thank Eva for reigniting this whole integration talk. I mean, she's a new kid on the block. We've been around the block
She and I are Gen
for quite a
Zs.
while. We've been around for quite a while, had extensive discussions with all sorts of parties to, to promote this regional integration in the exchanges. I think Eva, thank you for bringing us together again.
Fine.
I think
Quick question. We talk about bringing the exchanges together, but we need to have a unification of the regulatory framework too.
Which is the whole conversation around the
Yeah.
integration. I mean, there are different tiers to that
Yeah,
conversation.
really different tiers.
Eva, the final word to you as the host of this event and the person.
Just before you go to Eva, I just want to point out that what we are doing and what Eva has reignited is set out in the revised Treaty of Chaguaramas, right? And it quote Article 44D says, one of the goals is the establishment of an integrated capital market in the community.
So this conversation is the start of realizing and breathing life into that article from the revised treaty. Eva, the final word is yours.
Yeah, I mean, and that was one of the purposes of this event, to bring the region together. I mean, we have the heads of all the regional exchanges here. We share one common goal, and the outcome or the result of that was this index. And it doesn't stop there. There are so many things that could now dovetail from what we did today. It's really a history a part of history that has been created, and a milestone that we could build from. I mean, and thank you for the passion and the commitment in doing so. And just being involved in this project, I can tell you that the desire to do it is still there, and it's plain to see, right? Just building on the point that Marlon made in terms of unifying our regulatory framework, I think there's opportunity for that change to be market-driven, right? Yeah. Instead of us going to our respective commissions and asking for change, we can force that change in other ways, right? So, I mean, I want to end there.
Powerful words to end on. I want to again thank each of you, George, Trevor, Marlon, Marlene, and Eva. Thank you for being such a wonderful panel and for such an engaging panel. Thanks again.
Thank you. However, before we leave, please, we ask that the entire Caribbean region and the future federation of the West Indies remain seated just for a moment. There may be a question in the room, and if there is, we'll facilitate a question now. Yes, once again, we have a representative there who will ask a question, handheld for our same questionnaire from the pre-lunch segment. Minister, whilst you're in the room, just close your ears for a minute. Perhaps the regional stock exchanges are attempting to do what placed politicians in a challenging environment back in the 60s. Very diplomatic. Okay, yes, sir, please, by all means.
What would you...
Okay. Sorry about that. We just have to turn off one in order to turn on the other. Bear with us for 1 second. Are we off? And we should be on now? Yes, sir. If you can go ahead now.
What would you...
Yes, we're hearing you.
What would you say are the 3 biggest challenges in terms of creating that regional exchange or that integration between the exchanges? Top 3.
3 biggest challenges for that regional coming together.
I'll supply one. I think Marlon and Eva spoke to one before, the regulatory framework. I think the other aspect of that would be the currency issue in terms of settling transactions in an integrated market. I would leave one of my other colleagues to supply the third.
All right, well, I'll take it. Oh, go ahead. All right, well, I'll take it. I mean, yes, apart from the regulatory framework and the currency issue, I think one of the bigger challenges is, and I mean, permit me if I offend anyone, but, we have a lot of egos, right, that we need to overcome. We need to understand that once we do this together, we make ourselves stronger, we have a stronger footing. I think there is benefit in it for us now as a region and for it to also pave the way for the next generation and generations to come. And if we are to remain relevant, and it's a point I would have made in my speech before, it's better for us to do it united rather than to do it in silos. That way you spread the risk, because there are a lot of risks, especially in the smaller economies, that is very difficult to manage and carry on its own. You spread the risk and you also spread the advantages and the benefits.
Yeah.
So I think overcoming that part of it is very important.
Well said.
Also going to foster
You have
in a
to-
very real way economic development of the region.
Yep.
Yeah.
Yes, so also will foster real growth and economic development in the region, the point that Marlene just made. I'm only repeating because her microphone is also linked to the handheld that's in the room. All right, we'll facilitate a final question, if there is one. Going once? Going twice? Sold. Great. With that, thank you, panel. Thank you very much for bringing the Caribbean together here in Port of Spain yet again. And thank you, Dr. Marlene Natz, of course, for facilitating this particular panel discussion. Lovely to have all on. Well, ladies and gentlemen, we're taking a moment now as we change our panelists. We move immediately into our final panel discussion for this afternoon, that is leveraging the capital market to enhance the potential for SME growth. I'll ask for our panelists who will be on this final panel to just make their way to the back of the room in order to have your microphones placed on. This afternoon's presentation on the panel will be Mr. Randall Karim, who leads a team whose responsibilities include strategic planning, policy formulation, financial management, monitoring and evaluation, and implementation of business reforms and implementation of projects in keeping with the government of Trinidad and Tobago's development agenda. Mr. Karim has served in the Ministry of Trade and Industry for over 19 years, including in the capacities of Trade Specialist and Director, Policy and Strategy, and is currently the Chief Technical and Operations Advisor of the Ministry of Trade and Industry, providing strategic support to the Permanent Secretary and to the Minister. During Mr. Karim's tenure at the Ministry of Trade and Industry, he has served on several cabinet-appointed committees and on the board of directors of state agencies tasked with implementing trade and investment-related policies for Trinidad and Tobago. Our second panelist this afternoon is the Executive Vice President, Regional Investments, Banking and New Markets for NCB Capital Markets Limited, Mr. Angus Young. Angus Young joined the NCB Financial Group in 2014 as CEO of NCB Merchant Bank, Trinidad and Tobago Limited. 4 years later, he was also appointed Regional Head of Investment Banking at NCB Capital Markets Limited, and maintained dual roles until his appointment as Executive Vice President, Regional Investment Banking and New Markets at NCB Capital Markets on July 1st this year. Angus is the Director of NCB Merchant Bank, Trinidad and Tobago Limited, NCB Capital Markets Barbados Limited, and NCB Capital Markets Guyana Incorporated. And prior to joining the NCBFG, he served as the Managing Director of BDO Financial Advisory Services, which represented BDO's corporate finance and transaction advisory interest in Trinidad and Tobago. And before BDO, he was Vice President of Business Development at First Global Trinidad and Tobago Limited, charged with the responsibility of corporate finance and capital market origination in Trinidad and Tobago and Jamaica. Our third panelist is Mark Persad. As Managing Director of Global Processing Center, GPC, Mark Persad is the lead architect for organizational transformation and for repositioning the company for medium and long-term success. He has spearheaded the development of the iterative strategic long-term plan and built the foundation for quantitative financial analysis that is centered around the curation of a sustainable competitive advantage and a unique value proposition. For your information, GPC is a leading fintech company that provides world-class financial processing services, founded in 2007. The company was established as the first indigenous regional processor to offer convenient, secure, and modern payment services for financial institutions in the Latin American Caribbean region. GPC has continually invested in the development and integration of emerging payment technologies over the last 14 years. Prior to GPC, Mark's 25-year career journeys across a breadth of experiences, including developing his skill set at such global leaders as BP and EY, as well as earning senior managerial roles in the technology behemoths of eBay and IBM. Outside of the mainstream corporate world, Mark has also lived a life of a struggling entrepreneur and was the founder of Caribbean Box Office, an online event ticketing service, and co-founder of Sterling Mason Caribbean Estates, a Caribbean luxury property company, and Carry Crypto, a cryptocurrency consultancy. Our fourth panelist is the Chief Executive Officer of the American Chamber of Commerce of Trinidad and Tobago, AmCham TNT, Mr. Nirad Tiwari. Nirad has 25 years' experience in media, communications management, education, and international relations, is a member of the Wilton Park Caribbean 2030 Leaders Network and the National Tripartite Advisory Council, having been appointed by the Honorable Prime Minister of Trinidad and Tobago. Nirad was formerly the CEO of the TNT Coalition of Service Industries, chairman of the Caribbean Network of Service Coalitions, a member of the Communications and Public Affairs Division of the Commonwealth Secretariat in London, and a columnist for the Trinidad Guardian newspaper. He is an associate producer of Bazudi the Movie and the former chairman of the cabinet-appointed Fashion Industry Development Committee. Our final panelist is Dr. Mahindra Ramdeen, currently employed as the CEO at the Trinidad and Tobago Manufacturers Association and also director at the National Entrepreneurship Development Company Limited, NEDCO, and a member of the National Tripartite Advisory Council, NTAC. He was a director on behalf of the TTMA on the board of Metal Industries Company Limited and has previously worked as the Trade Development Specialist with the TTMA. Dr. Ramdeen is also a part-time lecturer at the Arthur Lockjack Graduate School of Business in the Executive MBA program on Macroeconomics and Caribbean Business Environment. He has completed a full program in export marketing and is fully certified as an export marketing trainer. And the moderator for this final panel is Maria Daniel. Maria is a partner in the strategy and transactions practice based in EY Caribbean's Trinidad office. She has led several high-profile engagements and provided clients with advice on raising both debt and equity capital, as well as strategic options analysis towards maximizing shareholder value. Maria specializes in business valuations, transaction support services on both the buy and sell sides, mergers, acquisitions, restructuring, strategic advisory services, including digital transformation and turnaround advisory services. Maria has recently taken up the portfolio of lead partner for EY Caribbean's ESG and sustainability services and is an advocate for finding balance between people, planet, and profits. The topic is leveraging the capital market to enhance the potential for SME growth. I hand you over to Maria Daniel.
Afternoon, everyone. Well, coming up in the rear, we have to ensure two things. We don't duplicate everything that was said before, and we keep you up until the end of the program. So I'm just going to start a little bit. I mean, I can't pretend to be a millennial, so I wouldn't go there. And the joy of that is the experiences. And I can tell you from the stock exchange, I've had a very long history of trying to build the stock exchange in Trinidad and Tobago. And for the panel before, we did a feasibility study of the regional stock exchange in 2004. I will be happy to take that stack of paper and give it to you all for free. So what we're talking about is nothing new. And what I want to explore this afternoon, I'll give a little story. I worked in a unit trust for 5 years, and it was in the period when the stock exchange was really taking off. And I'm mentioning this because it's very much in line with what we're going to discuss. And I remember in the banking hall, little old ladies sitting down and crying when they saw their balance of their first unit scheme. This is a true story. So this would be the not so wealthy who were encouraged in 1981 and in 1982 when our stock exchange started, and who invested in the first unit scheme. And 15 years later, they were able to see the value and the growth. So a stock exchange, when we talk about ESG, and yes, I'm leading sustainability services, all the scientists would tell you the one way to really combat climate change, apart from the environmental things we have to do, is to reduce poverty. And one of the ways that we can reduce poverty is having an efficient stock exchange market from two sides. On the demand side, you would have the people, just like those little old ladies, who a pension of $3,000 now really can't do much for you, that will have greater wealth. And from the supply side, which are our SMEs, our smaller companies that, you know, when I look at it over the last decades, are struggling to scale up. And part of that, of course, is not having the proper capital. So we're going to explore this in a number of different ways, and I know a number of these in many different capacities. So guys, I'm not going to stick to the script, but try to get two things out of this: different perspectives and some solutions. Because I think we sit here, and pardon me, but you know, I sit in a lot of these panel discussions, and we talk a lot, but the execution is where we seem to fail, and to really explore why we fail from that perspective. That's okay, right?
Sure. Agreed.
So let me just start with we've had two listings so far. I remember, again, 15, 20 years ago. 15 years ago when the Junior Stock Exchange was first starting, and Eva told me, don't talk too much about Jamaica, but I have to. There were 6 when we had a session just like this. And I was amazed at the type of companies that were going up and getting capital. It was a music company that was a startup, absolutely no history, and he went on the Junior Stock Exchange and he was able to get $1 million in US. So Angus, you have been in the banking sector, you have been on all sides of it.
Correct.
What do you think? And let's move away from the transparency and all the things that we heard before. What do you think, and I'm going to ask this to each of you guys, is really that factor that's stopping us from getting people to go on the exchange?
Sure, no problem. Everyone hearing me? Yeah. So let me just put some facts on the table. I am a millennial because with COVID I get back 2 years, right?
I still feel you're not making it.
I like with Eva, so I am a millennial like Eva, right? Give or take. So there's not one factor. There's several factors why we're not there, and I'm happy to say there are several factors why we're going to be there. So the future is very bright, right? One, and I have the benefit of examining the Jamaican experience because they were once where we are now until it snowballed, right? So if you look at our environment, we have an environment historically that has been quite buoyant. And in a buoyant environment, all boats rise with the tide. So that's one. 2, we have a long history now of very low interest rates. That makes capital very, very cheap. 3, unfortunately, we have a culture that doesn't pay much attention to governance and statutory obligations. That's another one. And all those things, some of those things still exist. Right? But what is going to change is really a function of what drives people to be motivated to re-engineer their balance sheets, because balance sheets count, right? And there are 2 factors that are happening worldwide and in Trinidad and Tobago that is going to change the amount of listings that Eva gets on the Junior Stock Exchange. And that's our promise, right, Eva? Absolutely. You're not the only person holding me to that. But, okay. 1, we live in an extremely volatile environment now, which is a new normal. So you had the COVID pandemic, which I don't need to go into how adverse that was on these companies. Two, you have very significant geopolitics today. So Ukraine, Russia, what's happening in the UK, all these things affect us. And three, very, very volatile energy commodity prices. So today, oil is probably $90-something. Let's not forget in 2020, it was negative $2. Extremely volatile. So how do you now engineer your balance sheet to manage that volatility? That is a reweighting of your debt to equity and an opportunity now to deleverage through the SME exchange, right? That's a global phenomenon. This volatility is in new order. The second thing that is centric to Trinidad that's very interesting is that the third generation is now taking over, or not taking over, I should say.
The succession issue.
That's right. So the first generation came to Trinidad with the clothes on their back, and they worked terribly hard, and they became a success probably in the last quadrant of their life. And they had kids in Trinidad, and they were born into the business, so they knew the difficult times and the successful times. That second generation had kids, and that third generation are the ones who are taking over now or not taking over. And we see a lot of instances where that third generation went abroad, pursued their own professional careers. They're not really interested in coming back to Trinidad and packing shelves or do what the first and second generation did, so you have a continuity problem. So that now is going to generate the opportunity for people to have a listing on the SME exchange so that they get to extract the value of the first two generations that they created through transparent price discovery and market-driven valuations and some level of divestment, right? So you look at an extremely volatile environment, and you look at the third generation taking over and not taking over, and you also look at our macroeconomics in Trinidad. We're not as buoyant as we were. So what happens, as Warren Buffett said, when the tide goes down, you see who's swimming naked, right? So when the tide is high and everything is buoyant, inefficiencies exist, and it is masked by everybody rising with the tide. Leverage is easy to come by, and these things are changing. So I do believe that all these factors are now taking place in the current environment that will channel listings onto the SME exchange.
Okay, so if I summarize, we have to not be as economically buoyant, so that will help us. The old people have to go, and the young people have to come in. I'm just making a joke, but everything you're saying is exactly right. So what you're saying is, if we think of the ecosystem and what drives change,
right,
the ducks are lining up.
The ducks are lining up.
To some extent, because if things are too good, then people don't need the capital, because I can tell you, we worked with quite a few people who started saying, yes, we're going to do the IPO, and then when you started telling them, yes, well, let's get the financials ready, let's do all of this, and we were going headstrong with a nice, big, medium-sized company. And then a banker came and said, 100 million, oh, here it is. And that was the end of our process.
Well, Maria, it's funny you say that. The goodly minister is here, right? And this morning, the other goodly minister would have said that the Ministry of Finance is going to deploy a program of SME loans that the government will guarantee. So we kind of counterintuitive today, right? Because if we want to get people into the equity markets, but we're making government guaranteed loans available to them, they don't go hand in hand.
So we have to pull back that money.
No, I didn't say that. Is Maria say that? Right. So what we have to do is have a macro look at how we want to support the SMEs and the capital market, and make sure the left hand know what the right hand doing to support the equity markets.
Okay, and I'm going to put this question to Mahindra from the TTMA side, right? And we're talking about, the ducks lining up. If you think of your members, and in COVID, how many of them would have appreciated having patient capital? Because I think that's what we miss with the equity part, right? So we talk about the debt and we talk about the equity part. But what we miss from telling everyone is the value of patient capital. And with volatility, volatility means we're going up and we're going down. Do you think that was the point in time where if your members maybe were more aware of the value or how that patient capital would have really helped during the COVID period?
The short answer is yes. I mean, but before I get to that, Maria, let me just touch on something that
Sure.
Anga said, right? He spoke about the fact that in answering the question, what are some of the challenges, why more people are not listening, the question that you asked, and he identified a suite of reasons. But let me say, in Trinidad and Tobago, what I recognize as well, in terms of speaking to my members and finding out why they're not listening or have an interest in this particular area, is a cultural thing as well. And a lot of them, and Angus said it, operations in Trinidad and Tobago, especially the SME sector, is mom and pop type operation.
Yes.
And they don't want to lose ownership status. They don't want to give up some of their business. Now, Angus spoke to the fact third generation coming on, and that could change. But we have to continue the education process. We need to disseminate information, let them know what are the advantages of listing, how they could realize capital, how that capital could be injected into their business to allow for growth and expansion and that kind of thing. I'm from the business community, so I can say a lot of them are comfortable, relatively comfortable. Not the SMEs so much, but a lot of manufacturers are comfortable being a small fish in a small pond. And that, we need to move away from that. We're living in a globalized world where competition is coming to meet you on your doorstep. So you have to embrace that competition. This comfort of being a small fish in a small pond is not sustainable. So we have to work together collaboratively, present the options for them of raising capital in the capital market, and make it sexy, make it appealing, and change the cultural dynamic where all this is concerned. Let them recognize that this is a way to realize safe capital, relatively easy capital, and engage the process in a meaningful way. So that's just in response to what Angus was saying.
Point.
And the second question you asked me what it was again? Let me get back to that.
If you think the patient capital...
And the short answer
you
is
answered
yes,
it
right,
with
yes.
that response.
Yeah.
So let me dovetail right into you from the ministry perspective and the trade perspective, right? How do you see even, doing business? Because a big part of this, of course, is we struggle to scale up. I mean, your point is exactly right. We have these mom and pops that are very contented with just, but if you really want to go out there is really where the export market comes in.
Right.
Do you see a role in exactly what Mahindra was saying, was in this whole education process, we almost need to show them the ecosystem. That if you're able to raise this capital, increase your capacity, here's what export could look like, here's how you could get US dollars. How do you see the ministry fitting into all of that?
Okay, thank you, Maria. Ramesh, you mentioned culture. Part of, well, if you're leveraging anything, you have to understand country culture. I know today is a Friday evening before a long weekend, so I'll be short. Maria, I think, if I could just piggyback on the earlier points made, one cannot underscore the enormous challenges in getting a number of SMEs to understand the need to meet regulatory requirements. At the Ministry of Trade and as part of the wider government, there's a whole ecosystem of support provided to SMEs, from business startups all the way to maturity. And whether we're talking about tax incentives to list on the stock exchange or to apply for any sort of government grant, you would be amazed at the difficulties and challenges by those within the government to process those applications. I would estimate roughly 75% of all applications are deficient in terms of getting persons to submit proper business plans, proper audited statements. And I think that is an enormous sort of capacity gap. Now, you're quite right. Getting SMEs to expand is to go to export markets. And at the ministry, we have been trying to sort of plug the gaps of information asymmetries through improving the ease of doing business. We have literally, and of course working across government, tried to roll out new and innovative solutions to improve the ease of doing business. I know Minister of Finance mentioned this morning, Ministry of Trade tasked with implementing electronic payments by the end of this year, and that is something we are committed to. If we don't achieve it, You can blame John Outridge at the
Yeah,
back
he
of the
sits right in the
audience.
back with the blue tie.
Part of getting SMEs to go and exploit export markets is providing market intelligence.
Right.
I don't know if you all are familiar with our trade portal called ttbizlink.gov.tt. And earlier this year, we rolled out something called the Trade and Business Information Portal. Ramesh, you were at the launch. And on that portal, it's the first time the government is putting out all of the business and trade procedures that you can literally, by a click of a button, go online. You're trying to import, export. You want to know what export opportunities exist outside the jurisdiction. What are the tariffs you would pay? All of the cutting-edge trade data. So we are doing our best not only to improve the ease of doing business locally, but provide SMEs with that information, commercial intelligence to make better decisions.
And are you seeing traction? Do you see people using it?
Well, as of yesterday, we launched on May the 25th. We have had 125,000 persons visit the trade portal. So persons are obviously interested. Persons literally on a daily basis, we have an inquiry point, asking for all sorts of commercial questions. The interest is there, the drive is there, the passion is there. It's to connect that drive and passion
to execution.
To execution.
Narada, just going to ask you to join in. They have a specific question for Mark afterwards.
So, good afternoon, everybody, and congratulations to the Stock Exchange on celebrating your 40th anniversary. It's a remarkable achievement. Thanks for having me as a participant in this discussion. So, I will not repeat all that was said. I agree with all that was said. What I would say is, and it was alluded to in earlier conversations, what we need to do is not only deepen but widen the capital market. So we need to add segments. So for us to get listings, we need to have the money between the banks and the exchanges. So the private equity, the angel investors, the venture capitals. You were teasing me and saying you were going to ask about Bazodi. But Bazodi got made through essentially a private equity investment that would have allowed it to get to market. And my involvement was almost an angel investment with a sub at a sub level. And I mean, I know that other companies have used that. So how do we create the environment that is dynamic? And certainly in Jamaica, they're way ahead of us in this regard, right? How do we create the environment that is dynamic at all levels so that we do get the kinds of growth? Because even with private equity comes some of the rigor, because private equity will come with milestones. So if somebody comes and they're getting, say, $500,000, say $5 million, TT or US, is not going to be a check for the whole amount. It's going to be a portion based on achievement of, and then you get the next tranche based on the achievement of, and all of a sudden you start to have rigor. With that, and we're seeing it with a lot of companies now, they are looking for the private equity, but they're looking for the private equity expertise. So they want private equity partners who can help them with governance, who could help them with connections, who could help them with strategy. And when that functions well, the banks get better customers from the companies that need bank loans and are more fit for that. And then the companies realize, wait, I don't have to be afraid of having other people in my business. It's actually been beneficial. And whereas I was thinking this could be a $5 million business, I realized that it could be a $50 million or $5 billion business, and therefore going to market with it makes a lot of sense. So I'll stop there for now.
So we're going to ask Mark. Mark actually worked at EY. He said he was a struggling entrepreneur, so desperate he actually came by us and got a job for a little stint. So Mark, what I'm going to ask you is, you've sat in that position, right? Entrepreneur, looking for financing, looking for investors, etc. Why didn't you consider the stock exchange? Why didn't you consider the junior stock exchange? Or was it before the junior stock exchange existed?
Probably in parallel. Great question. And just to segue, Eva, thank you so much for inviting the chamber, and congrats. Your programs may say Karen Yipchuk. I'm not Karen. FYI, the brilliant Karen Yipchuk was supposed to be my place, but I'm trying to do her justice. It's a great question. I think for me, why I did not consider it was...
You're here as chair of our trade and investment.
And I'm also the chair of trade and investment for CHAM as well, and a few other things, yes. For me, it was the problem that I think, even though I've had a bit, my degrees in business, the stock exchange at the time for me was this opaque thing. I was a struggling entrepreneur, and I don't overstress struggling. So every day I fought to pay bills, every day. That's what an entrepreneur does, that's what a founder does for years. And so trying to raise capital in an environment that probably has the rigor that I can't provide. I can't stop my business to try and put in governance structures, put in, paying capital hierarchies. I don't have the time for that. I'm trying to pay a bill day to day. For me, as I expect a lot of entrepreneurs, words like that Angus used, like deleveraging and restructuring your balance sheet, are not my language.
Yeah.
My language is surviving day to day. And I was an intellectual entrepreneur, not a poverty alleviation entrepreneur. I started a company that was doing ticketing online, and then a cryptocurrency consultancy, etc. So they weren't selling pineapple yet at the side of the street. These were sophisticated companies of sorts. But for me, this opaque thing that was a junior stock exchange or the stock exchange, I assumed there was way too much rigor for me to be able to get through one door. I had no time for the rigor, and then the regulations would be somewhat burdensome. The compliance would take my time away from survival. And that's why I never considered it a possibility. And the companies I work with now and for now and help consult, I think, Ramesh, you're absolutely right. The first thing that they have to do to even start to consider this is have it as an option in their minds that it's possible. Yeah. Otherwise, you're not going to get somebody saying, yes, I want to deleverage or de-risk my bank. That's not going to happen. They just have to have that junior stock exchange as a viable option. And it comes down to the education and the understanding that it's out there. The chamber I'm with and AmCham, we have lots of SMEs, lots. Yeah. And I don't ever hear somebody coming to me and saying, they all come to me, and Maria's been part of that ecosystem for a long time. Help us with angel investing. Help us with mentors. Not one has ever come to us and said, help me IPO. Not one. Because it's not an option in their mind. Culturally, behaviorally, whatever you want to say, it is not an option. We have to change that as a group and people here. So,
hold up, Mark.
What I would say is that...
Hold up. No, man. So NCB and the Chamber of Commerce would have partnered on an SME IPO a couple months ago, right? So I just want to correct it here. We have approached the chambers. My good friend here, the doc from the TTME, was also a part of it. So we have approached the Chamber of Commerce and the TTMA, and we co-hosted, and I didn't charge you all anything, it was free, right? Eva was a part of it. We co-hosted almost a SME IPO for Dummies webinar.
Yeah, I've done that with Wayne Item
fantastically well attended, right? So I just wanted to correct you there, Mark.
No, but I'm not saying you're not doing it. I'm just saying from my exposure to the SMEs, the majority at least do not either believe it's a viable option or understand it's a viable option. Yeah. So there's work to be done to make sure that education is there. And if you're doing it, NCB, and I spoke to Marley at the break and recommitted to the from the Chamber's point of view, it's great. But I think there's a long way to go. I work with one now in light manufacturing. They're looking for a buyout. They're trying to figure things out. IPO is just not in their head. But it may be also they don't want to lose the control. They don't want to lose the privacy. They don't want the performance pressure. It could also be that, if they do understand. And that's, again, trying to balance, well, here's the benefit versus the cost, right?
Yeah, I think we do have to change something, because I was part when Wayne Iton was here. We did, I think it would have to be about 1.5 years of breakfast sessions on the road to IPO. Breakfast sessions on them to even understand how a valuation could enhance your wealth. It could be your legacy, how to help you grow, how to scale up. And we ran it for a year and a half, free of charge as well, Angus. And, you know, people come and you see them interested and they take in the education. But I feel part of it is the other side of it, which is also the investor side of it, which we never really pay attention to. So we had two, but they weren't oversubscribed, right? Let's be honest, they weren't oversubscribed. And again, it goes back, and all of you all have mentioned culture. So is it deeper? And Minister, you could take this one back. Is it that we need a deeper loyalty and patriotism to Trinidad and Tobago so that people will invest in their own companies, right? You know, we talked about the next generation, and I have in my house, and they recently, and I see Shariel here, and they're running this program in schools about stock, and I was telling Eva about it on the break, and she came back and she said, Mommy, I want to buy stock. I want to buy stock. Nigel, you'll be happy to know Marcy was the first one on her mind. And this was the logic, though. This was the logic. We spend most of our money on groceries, and we're in the grocery every week, Mommy. So I want to buy stock in that because, you know, I'm giving money to that every month, so I want to get back something from it. So this is a 16-year-old, and I think that's where the culture building starts.
Sure.
Because, so Angus, if you think of it from your, you know, investment banking side of it, and what you would look for from an investment perspective,
Sure.
do you think from the investor side of it, we're doing enough work to get people to want to invest in the stock market? Because unless we have both sides working, it's never going to take off.
Unless you really do pay attention to these things, right? The impetus is there. Because every one of us in this room, if you're not beating 5% return on your money a year, you're underwater. Because inflation alone going to eat that up, right? So nearly everyone I would say in my generation, if we're going to approach retirement and plan to be comfortable, you have no option but to be chasing alpha, right? Because you cannot plan for retirement on fixed income in the interest rate environment that has persisted for I would say, a decade plus. If you do that, you're in trouble. So I would say my generation, the millennials, right? We have to be chasing alpha. And you're not going to get alpha from a fixed deposit. You're going to get alpha from playing on the different layers of the capital structure, as in private equity, public equity, quasi, mezzanine type instruments. So that exists in Trinidad, but it doesn't exist in a formal way. SMEs get financing through angel investors, private equity. You don't hear about it because it's private, right?
Yeah.
What institutions like NCB, which coming out of Jamaica, which they're pretty much perfected, is institutionalize the access to those layers of the capital structure by providing strong frameworks of governance and risk management for anyone here to invest in it. That's one. Because you're not going to get access like Nira did if you're Tom, Dick, and Harry and nobody know you, right? He had access because he's part of an ecosystem. Institutions have to bring the access to everyone here, wrap it in a framework of risk management and governance. That's one. The second thing is, I encourage everybody to check out Go IPO, right? Which is the first of its kind in Trinidad, which was launched. From your phone, you can subscribe to IPOs, all right? And we've brought this technology to Trinidad. So you can subscribe, you could wire your money, subscribe to IPOs, receive your refund, receive your allocation, all from your phone. So bringing digitalized access wrapped in that framework of governance and risk management to everyone is how you're going to get access to alpha if you're not totally engaged directly like Nirad.
Agreed.
But Angus, what about if the two companies that are listed are able to tell their story, to make that story known to everybody else who has an interest? We need to promote that as well. And at the education level that you speak to, and Maria spoke about it, at the secondary school level. We need to start bringing this into the minds, to the culture. That's how we have to change the culture.
Yeah, but
it's not
part
going
of-
to change with people who are in business 20 years already.
Agree, but the part of that storytelling, though, right? And again, I go back to, you know, the ecosystem, right? We have to have trades. The only way you see the capital appreciation is we have to have trades, right? So we need to widen the holding as well.
Yeah.
So, you know, to tell a story, the story have to show, look, you know, I put my money on, I put my company on the stock market. I have, you know, less ownership, but look at what I'm worth now, right? And there's always a what I'm worth now scare as well. But one of the things I want to throw out to you guys for discussion is, you know, we kind of do this kind of broad brush. You know, let's all do this IPO. Let's go out there with the mass market. Let's help SMEs. And your point, and you know, I didn't call you Ramesh because I saw anything, Mahindra was your
Doesn't
first
matter,
name,
that's
but I
fine.
hear them call you Ramesh. I was like, I have this man name wrong all this time. But if we were to choose, and we have 3 chambers and an association here, not just lumping it there, 5 good companies, right? Or 10 good companies. And we say, okay, we're going to work with these 10 good companies. We're going to get them ready. We're not making them. We will choose them and say, guys, you have an exportable product. So, you know, export have to come in here. And we just choose 10. And we talk about grants. And sometimes I say, we want to give 50 million and we want to give it to 50 companies. That doesn't make the impact because you need larger amounts to really make a change. So do you think one solution is we find 10 companies, right? I'll tell you, EY will do the consulting part free of charge. My staff will kill me for saying that. But anyway.
You'll capture that there, right? Somewhere you had to
No,
state
but
that,
because
right?
it's never going to change. And I would like to retire, Angus, and buy into one of these companies. Retirement is very soon. But we choose 10 companies, and we say, let's work with them. Governance, risk. We start, these are the players in the market here who could invest. And we get it going, because I think we will be sitting here, I will be 60 and not have that great pension and have to continue to work if we don't do something differently. So what is your view on that?
Yeah, so a couple of things. I mean, I do think there's merit in trying to do it from the push side, but there's also a pull happening. And to be fair to the government, I've heard companies come to me and say, at least 3 of them, that because of the tax incentive, they are trying to put things in place to list. How far along they are in their journey, I mean, I'm not doing quarterly check-ins with them, but at least the intention is there. So I think that's one thing. With regards to the ecosystem, the second thing, though, is that there are there's at least one structured private equity company in the market. The minister knows that, in Aspire. And one of the questions that was on the list that Maria is choosing to wing, which I think is important, is essentially around how do you provide funding that is not asset-backed? So you do trade finance, you do receivable financing. I mean, that was one of the first products I heard about when you all came to the market. So that's one thing. So if you have a receivable, I'll buy it at a cheaper rate, and that helps with your cash flow, particularly if it's government receivables.
VAT.
Not VAT. I don't know anybody. I don't know anybody who's still buying VAT. But anyway, so that's one. But it extends to anything else, right? So if the stock exchange is putting on this conference and they know 8 months out and they get their sponsors, but the sponsors are saying they'll pay when the conference is executed and they want the cash flow, there are companies that would buy that. It's happening in the entertainment industry. A company called C15, for disclosure, which I chair, we're buying receivables from entertainers for the carnival season now. They're getting their endorsements, they're getting their cash, and we're doing business like that. So all of these things, I know you're asking specifically about listing, but it's changing the culture, and what is happening in the tech sector is going to have a huge impact on the rest of the economy because of the collaborative, open nature of that sector and because of the international outlook of the sector from startup. So if I am starting a business to sell bouquets by blockchain with some kind of smart contracts or something like that, I'm not building that for here. I might be testing it here without realizing it.
And microfinance as well.
But I'm not building that for here. And so when those companies start, and that is the third generation, they are into that. They are the ones you're seeing driving the development of this sort of startup culture that will come back into the moms and the dads who are running the companies today to say, well, you know, even for those who don't want to live here, unfortunately, that is a reality. In the third generation, we are seeing a lot of migration out of Trinidad in the business community. And so when their moms and dads, but they don't want their moms and dads slaving till 70, 75 in the business in the same way that they were doing at 40. So they will talk to them about options. And with regards to getting companies ready, I'm sorry I missed some of this morning, Ava, but we were all talking about the mentors that you all were going to, I don't know if you discussed it.
Next month, launching.
Next
The minister talk about next one.
Okay. So the mentors that would be available would be a huge role. And now, as you realize, 10 of the mentors have no jobs because EY is going to do that for free. So you don't need 10 of those mentors.
Oh, sorry.
Can I just touch on something that I was saying? So just to piggyback, two things you're talking about, the receivable financing. So I think what we do we have a small outfit in Canada. What we're able to do, because we're a fintech, is piggyback on transaction financing. So we have RMR, recurring monthly revenue, that we can leverage for financing. As the fintech industry grows in Trinidad, they'll have a similar model and they can leverage that. But then to touch on your point, Maria, on the ecosystem, I think that is incredibly critical. It is an integrated ecosystem, and reinforcing any one point without reinforcing the rest of it is bound for failure. So it is a fully symbiotic ecosystem. So you need the buyers on one side, you need the supply side on the other side. And to make sure they're all educated, all invested, the market makers, you need that liquidity, that confidence. All of those things have to be attacked at the same time. Otherwise, you will never get any traction, which we've seen. Right?
I think we're out of time, so we need to wrap up and get some questions going.
So, Maria, thank you. Are we back on? Right, so Maria, there is a question. In fact, it's from the minister himself. So that will help with the conversation a bit. All yours.
No.
Just check one more time for the minister's mic. Let me know when it's up, please.
A surely question is not for me.
Are we good?
That's not on purpose, huh?
Minister, sure we could hear from here.
Yeah.
Yeah.
Or come to the stage.
By all means. Yeah, we can facilitate at the podium on this left of the stage. And this will be the question for this segment.
Good afternoon. Can you hear me?
Hearing you well.
Yeah.
Good.
Loud and
Good
clear.
afternoon, everyone. Sorry for the delay. I had a question. The last time I checked, our commercial banking system has an average excess reserves of almost $5.1 billion. That is as of September of this year. Why is the commercial banking sector not getting more involved in investment type activities, such as private equity, venture capital, and so on, especially in an economy that desperately needs it? The banking sector has the capital, the brain power, and the infrastructure to be involved in this space. Why is it not happening? And I want to use gentleman at the end as an example. I'm sorry, I missed your name. Mark.
Yeah.
You have your ticketing business. Now you're looking for investors. Let's say even pre-IPO, you may come to private investors and say, I'm looking for you to put your money in. You know, my hard-earned money, I may think twice about putting my money into it. Even post-IPO, I may think twice. But if it's Mark partnered with an RBC, Mark partnered with an FCB, whoever, so an institution that brings confidence, or NCB. You see, I think.
Or what if they all come together so we have a bigger fund, less risk,
so we could put that $5 billion to work, right?
So Minister,
let me finish one second. The investment challenge I think that we've been having is a lack of confidence. Investors want to be involved, but they don't want to waste their money. Yeah. They want to understand that there's some level of protection. And I believe if the banking sector would get more involved in the investment in these SMEs and other businesses that have potential for growth, we will see a lot more confidence coming from the investment community. That's
so one of the things that we had suggested in our budget submissions for the last 3 or 4 years consistently is that we take a sliver of the H&F, the Heritage and Stabilization Fund, and we deploy it in private equity venture capital to do exactly that. So the government can play a role in there too.
Right, but
now, I'm not going to speak for the banks.
That would still leave the $5 billion in excess reserves untouched.
The banks are all here. What I would say as a customer is I want the banks to perform a certain role, and I want them to keep that portion of my funds safe and allow me to buy a car and a house.
Well, that'll come from the profits, though, of the banks. And retain earnings.
So, Minister, as of today, the excess reserves, as of today, the excess reserves is actually 5.9 billion, right?
$5.9 billion.
But I'll tell you why. The comfort zone is a beautiful place where nothing grows, right? And if people making money and comfortable and belly full doing what they're doing now, they're not going to change.
Which is waiting for the government to come borrow that money.
So that brings me to the other point. I am opposed to using the Heritage and Stabilization Fund for private equity.
Thank you.
All right? I think the private sector needs to step up to the table and through institutions to provide the framework of access. There's more than enough funds. And remember now, we need to chase alpha. If we're not earning alpha, you're going to be in trouble, right? So I think the private sector needs to step up. There's enough liquidity, and the brokers who make the markets need to step up to the plate.
And this here is in TT dollars. The excess reserves in TT dollars.
Is it TT dollars?
HSF is in US, is invested internationally so that we can get a higher return and we can get domestic.
So, Minister, I don't agree that the government needs to get involved in that way. The government, I would say, gets involved in the way of protecting the people through regulatory and frameworks and so forth. I think that is the involvement that we need.
Agreed. And if we do set up this fund with all the banks, and I know First Citizens, look them.
I'm sure they're all eager to discuss
that. They're all
eager.
It's having the regulatory framework done quickly so it could support a structure like that, because that's where, again, the ecosystem doesn't work. So we come up with these bright ideas, and then we need regulations to govern it, we need legislation, but that's what we need the government to do, facilitate. I don't think I agree with Angus. I think the private sector could come in here, and if the bankers also say for some of their star customers, we lend you more, but what about putting a little equity in the junior stock exchange to get that loan? So
I think that's a discussion we can all have going forward. But thank you so much.
Thank you, Minister. Right you are. If we could have the volume back up one more time. Raise it for me, please. Thank you very much. So, Maria, we're going to pause because the reception that takes place in the pre-function area right after our closing remarks will allow this group, the minister, the banks, and all others to have a warm listening conversation all about what you could do with $5.9 9?
9 million. Billion.
Okay, 'cause that's going to be, so when you leave this conference today and spouse asks, so how was your day? How much money you made today? 5.9 is the round figure. But certainly, we brought the conversation to a pause at this time in order to bring our program to a conclusion. However, I want to take the opportunity to say that what may have been the last conversation has moved its way up to one of the priority conversations within the investment world as we pivot from the 40th anniversary of the stock exchange. So thank you, Maria. Thank you, Angus. Thank you to Mark, to Randall, to Nirad, and Dr. Ramdeen as well for all being part of this panel. I must ask that you make your exit that way as we prepare for the next segment. And let's thank our panel once again. Permit me to thank our diamond sponsors, Answer McCall, Answer Merchant Bank, Guardian Media, First Citizens, Massey, NCB Capital Markets Limited, Republic Bank and the Unit Trust Corporation. Acknowledge PwC as our luncheon sponsor, and JMMB Investments, Scotiabank and Angostura as our emerald sponsors. Our closing plenary, ladies and gentlemen, comes from Rhonda Cellier, Head of Shared Services at the Trinidad and Tobago Stock Exchange Limited. So Rhonda, you have the table, you have the floor, you have the microphone. It's all yours.
Thank you, Wendell. Good afternoon. All protocols observed. As we come to the end of today's proceedings, on behalf of the Trinidad and Tobago Stock Exchange, our CEO, Eva Mitchell, our board of directors, our staff, I'd like to thank all of you for making the time to attend this inaugural event, which in my humble opinion was quite a success. I'd also like to say a special thank you to our host, Mr. Wendell Constantine. The level of interaction of delegates throughout the conference was impressive, and I sincerely hope that the networks created will be of significant benefit to all participants. The sharing of best practices and subsequent transfer of knowledge from the relevant sectors is a critical pillar in the development of our regional capital markets. We at the Trinidad and Tobago Stock Exchange do believe that the insightful discussions held throughout the day will go a long way towards stimulating the growth of the capital markets and enhancing the economic development of the Caribbean at large. Having said this, we look forward to hosting even bigger and better events in the future so as to maximize the growth potential that is obviously here. In closing, and on behalf of the Trinidad and Tobago Stock Exchange and the Trinidad and Tobago Central Depository, I wish to sincerely thank all stakeholders for attending our 40th anniversary events. The value you have created is also priceless. We also express our heartfelt gratitude to our sponsors, without whom this event would not be possible. Our Trinidad and Tobago Stock Exchange 40th Anniversary Conference is now formally closed. You are now invited to join us in the foyer for some light refreshments, courtesy the Angostura Group of Companies, and some entertainment. Thank you and good evening.
So, ladies and gentlemen, as you leave, if by chance you hear any loud noise emanating from the pre-function area, it's not noise. We're in the weekend of the celebration of the Festival of Lights called Diwali. It does not augur well for conversation, but it allows you to move your feet, find some level of refreshment, and enjoy the good company. Thank you. Enjoy your evening.